Okay, everybody, welcome back. I think I just had a false start on a stream. Hopefully, you are reading me loud and clear. Happy Wednesday. Just wanted to go through a few things on the growth of the money supply. A lot of interesting Bitcoin news, of course, as always, with the Trump administration. The Sovereign Wealth Fund, the Bitcoin Strategic Reserve idea. And though I'm no fan of David Sachs, a major Putin appeaser, I do think there are some good people in the Trump orbit that are going to stick with Ukraine's sovereignty until the end, which is what the United States traditionally has done for nations that fight for their freedom around the world. I always remind people there's nothing more American than getting help from your friends. Americans can thank the French for lots of help in the American Revolution. Wanted to start actually with this piece of news here. Zelensky sat down with Piers Morgan yesterday. I really wish I could speak Ukrainian because I would reach out and I would do it as a full-time job if I could for zero hryvnia, $0. I would do it absolutely for free to translate whatever Zelensky is speaking. Of course, I would need to be fluent in Ukrainian for that. But this was unfortunately a very terrible translation. It seemed like a young kid who was doing his best, but just not keeping up with the pace and the authority that Zelensky, of course, was speaking in his Ukrainian to Piers Morgan. But I was going to comment on this actually last week, not this interview with Morgan, but Morgan's interview with the loathsome Tucker Carlson, who it should be beyond a shadow of a doubt at this point. He is simply an opportunist, an appeaser, cozying up to the likes of Orban and Putin and Sergei Lavrov in his interviews, always acting so confused and saying that the U.S. has worse architecture than Russia, of all places. It's unbelievable. It's unbelievably disingenuous. He has no idea what he's talking about. And just the absolute slanders that he throws at Volodymyr Zelensky and the Ukrainian people have just, they're beyond loathsome. And I will always say that. The same as people like David Sachs cozy up to these types of ideas that somehow Putin is, the smart, strong leader that's protecting his people. Volodymyr Zelensky and the Ukrainian people are unbelievably heroic for what they have been doing these last 3 years with some help, but there could have always been more help. And I've held from the beginning, the West, NATO could have ended this war in 2 weeks. That was a lot harder to say back in February, March 2022. But the Ukrainians have clearly from April 2022, proven that they can withstand an onslaught from the absolutely corrupt, loathsome, terrible Russian army. So I just want to say that, when people just continue to reiterate these poor, terrible talking points that Carlson does, saying that Ukraine is corrupt, whatever. But anyway, Zelensky did address some comments that were misconstrued, of course, in the Tucker Carlson type media, on Twitter, everywhere else, that aid to Ukraine was missing. In his own words here on the Morgan interview, he addresses this. Of course, he's not saying that it's missing as far as it goes of like it's now in some Panama bank accounts and whatnot. This is all Russian disinformation. He's saying that of the approved military aid, which by and large is weapons and accounted for, both on the U.S. side and the Ukrainian side when it arrives, he's saying that some $30 billion was not ever in Ukraine, didn't even make it there. And that's the value of weapons. That's absolutely what he's saying. Now, there are, of course, some other things mixed up. He was talking about the aid to Ukrainians abroad, which is great, and they want Ukrainians abroad to be helped. But, of course, Ukrainians abroad aren't directly helping the war effort, because Ukrainians abroad also, as they fled Ukraine in 2022, took a lot of assets, their own assets, away from Ukraine. So Ukraine was left with not a lot to fight. So it's just, again, unbelievable narratives turning upside down the reality of legitimate sovereign people being needlessly invaded by a mafia dictator, terrible, corrupt system that is Putin and Russia. And thank God they are so corrupt. And I don't say that with any glee, because any Ukrainian family that has suffered the bombing, the droning, the glide bombs, just the terrible attacks that they've been suffering day in, day out, week in, week out, it's just inexcusable. Russia is going to pay for this for decades, if not more, for what they've done to the Ukrainian people. They will. At the end of the day, they will. And Zelensky continues to lead his people in a very strong way. Two other things I wanted to point out. You have to just keep sort of reiterating these things, because people, it gets turned around in talking points. I've heard, the libertarians like Tom Woods, Scott Horton, Dave Smith say this, that somehow Ukraine is not recognizing religious freedom because of the Russian Orthodox Church branches that have been shut down in Ukraine. Those were used for spying and hybrid warfare activities from the beginning. And this was, as far as the church themselves, the church branches themselves, all of the Ukrainian churches demanded that they be shut down, which Zelensky, of course, reiterated in this video with Piers Morgan. Small examples. The UK had a massive amount of censorship. If you want to talk about censorship, about one message getting out in the fog of war, there was a lot of censorship that actually happened in the UK, just as an example, in World War II. I'm not saying that Ukraine is censoring anybody, but if you want to talk about an agent of the Russian government, which clearly the Russian Orthodox Church was doing in Ukraine, they had every right to shut it down as quickly as they could, and that's what they did. And this was also demanded by the Ukrainian church. And there are a few different churches. I'm not familiar with all of the different churches, because the Ukrainian has both Greek Orthodox influence, but also Catholic influence. I guess that's the Unitary Church. Let me know in the comments about any differences there. But regardless, Kirill, the patriarch of the Russian Orthodox Church, which they still view themselves on the same level of Rome. This goes back to like 2,000 years, to the oldest Christian debates in the Council of Nicaea and so on and so forth. These guys are established KGB agents for decades. Kirill and all the rest, they are KGB agents. Okay, so if you want to talk about freedom of, to practice religion in Ukraine, that stops when you start implementing hybrid warfare against the country that you are domiciled in, as the Russian Orthodox Church was doing. So there was no opposition to removing the Russian Orthodox Church. No one was being persecuted against. No people speaking Russian were being persecuted against. As everybody knows, Zelensky's native tongue is Russian, not Ukrainian, but Russian. It's an embarrassment for people like Tucker Carlson to continue to distort these narratives. And Zelensky mentioned that during the interview, which is important, and I would encourage people to watch that part and to understand it, because it's a very important component. So I do think that overall it was a good interview. He addresses some of the just childish assertions and claims that people like Tucker Carlson in this vomit orbit of, loathsome, hard right, I don't know, MAGA, whatever, crazy enthusiasts. And again, I have no problem with Americans wanting to help America first. It's totally fine. Have your best life. Do what you need to do. But don't sling mud in the eyes of Ukrainians who are fighting day in and day out from an aggressor that you promised to protect in the 1994 Budapest Memorandum, that you gave security assurances to. All right? As wishy-washy and terrible language as that was, don't sling mud in on them. They're having enough problems as it is. So that was another. He just continues to address these things, which are very, very important. Both the idea that there's somehow, this is just fake. It's literally fake news, Russian disinformation, Russian propaganda, that Ukraine is such a corrupt country. It's confiscating and taking, for Ukrainian oligarchs, they're taking U.S. approved money, all the rest. Zelensky's saying, first of all, which everybody knows, you can look at the Kiel Institute's website, the vast majority of the aid that came to Ukraine is in the form of weapons. And it's the dollar value of old kit in both the United States and Europe. That's what it means when you put a dollar value on it. It doesn't mean dollars. It doesn't mean base money, which I'm going to talk about in a second. And I'll show you how big the United States dollar monetary base is versus Ukraine versus Russia. That's not what it means. It just means old kit that is being granted to Ukraine by the U.S. Congress. Zelensky says at least $30 billion in value has not arrived in Ukraine. And there were other news sources as well talking about how Biden did this on purpose to withhold this aid until the very end of his administration. Again, why? They're trying to manage expectations. They did it terribly. We could have knocked these losers out of Ukraine in the first 2 weeks. Speaking of the terrible, terrible, corrupt Russians, of course. And again, that's just another thing. The narrative that somehow Zelensky and the Ukrainians are corrupt, it's so egregious when you're comparing this against their aggressor, a 25-year dictator who has just a few strongmen in his orbit that he needs to keep happy. They're called the Siloviki in Russian. That these fools can be compared with the democratically elected government of Ukraine and its leaders like Zelensky. It's just a farce. Like Lukashenko, a 30-year dictator. That this fool can be compared with Zelensky, it's just terrible. And that was another point that I wanted to mention, the other point about elections themselves. They are at war. It is martial law. It has been that case since February 2022. There is no requirement to run elections, just as it was in Great Britain during World War II, just as it was and is in every other war, every other country that goes into martial law if need be to protect their citizens from an aggressor. And Petro Poroshenko, the major opponent and prior president of Ukraine, said as much recently in an interview that this would destroy Ukrainian unity. So these are just unbelievably tired, terrible, tropes, and I hate them, and I wish that I could translate for Zelensky, because the kid seemed like a nice guy that was translating for him, but he just couldn't get the point across of what Zelensky was trying to say. You watch that thing on like 2x speed. It was maybe a little bit more manageable, but for English speakers, it was hard to watch. But anyway, very good interview by Zelensky. I would encourage him to do many more. All right, so let's go back to money now. Bitcoin is continuing to make waves in Trumpistan and the Trump administration. I want to talk a little bit more, though, about the playing field of all of this, what we're talking about, what Bitcoin means in the landscape. Okay, so here you can go to my website here, porkopolis.io/top money. Here I got the top 10 fiat assets plus Bitcoin, plus gold, plus silver. I'm going to show you a a scatter plot now, which shows you the USD values of the top 50 currencies in the world and their all-time inflation rates. And when I say inflation rate, I mean the growth rate of the money supply. Okay, put myself on there so you can see me. I mean the growth rate of the money supply. Okay, so I'm going to put this on now. Okay, so let's take off the commodities. We just have fiat money at the moment. All right, y-axis here is log scales, market cap, all-time CAGR. That means compound annual growth rate. That means from the beginning of the data, which I have for any currency, in the native unit, so in dollars, in euros, in yen, in yuan, in Brazilian real, Argentine pesos, so on and so forth, in the native unit, how fast on an annualized compound, the strongest method you can do, way better than any stock to flow metric, in the compound annual growth metric, how fast do these money supplies grow since either December 1969, all right, which is about half of the currencies, not as many since exactly December 1959, but December 1969, but let's just say roughly half since the 70s. And then, as more currencies have come online, stabilized, the great moderation, which happened in the 80s, you have more currencies. It means since that time. So it's like a scorecard. It's not necessarily what any individual citizen is feeling at any specific point in time today, but it's the broad scorecard number of where the money sits. Okay, so right off the top, you're going to notice the biggest bubbles here are the top four currencies. We got the yen, we got the euro, the dollar, and China, all overlapping right around $5 trillion in value, log scale. All right, now let's just look at the growth rate. The United States, dollar, 8.8%, 8.83%. That means from December 31st, 1969, the dollar grows at an 8.83% compound rate. That is the value of the Federal Reserve's balance sheet. That is the value of the monetary base. That is brass tacks, the number that you want to think about when you think about the loss of your purchasing power and the growth of the units of your currency. The euro. The euro is a little bit more complicated, all right off the bat. Obviously, we have 17 nations in the euro zone, 27 nations in the EU. Only 17 use the euro, and some nations came later, like the Baltics. Came in the mid 2000s. Some came earlier, and the euro started itself accounting in 1999, actually 1998, 99. But for the euro, we can still go back in time before that and use the main currencies that were involved. I don't have all of them. I have the top three. So it's the Italian lira, it's the Deutsche Mark, and the French franc. I'm still trying to get a couple of the big ones are the Dutch guilder and the Spanish peseto, I guess it is, right? So I'm trying to get those, but I don't have them. But it doesn't matter. It's included in this number. Blended in is the going back to 1969 is the French franc, Italian lira, and Deutsche Mark. And if you look at that, we got a $5.6 trillion value today. $4.87 trillion today. 10.31%. Okay, so the euro inflates on average 2 percentage points faster, or percentage point and a half faster than the dollar. We got the yuan, Chinese yuan, $5 trillion market cap, all-time CAGR from here. This is actually only from 1999, 10.7%. I'm going to increase this time series as well. It's only going to go up. I do have older data, but it's only going to go up that number. So there you go. The Chinese yuan inflates at 10.73% per year. And we got the yen, $4.2 trillion CAGR. They've been doing some pretty significant quantitative tightening, all right, reduction of their money supply, really for the first time in like 20 years. Regardless, since 1970, they started actually their data, I think January 1970, so I don't have from December 1969, which is my general start date. 11.4% CAGR, 11.4% per year. Okay, so there you go. Biggest currencies right there, 20 trillion. United Kingdom, is the fifth largest currency in the world. It's about $1 trillion. It's 1.1 trillion. Sorry, $1 trillion. And actually, depending on an exchange rate, but you're looking at the moment, a little under $1 trillion sterling as well. All-time CAGR there, 10.16%. Switzerland, 600 billion. 600 billion only. So notice how we go from $1 trillion from the fifth largest currency. Then we got Switzerland, $600 billion worth of value in monetary base, 10.3% CAGR. And India, second largest country in the world, 550 billion only in the monetary base, 15.58% CAGR. That goes from about 2000 as well. So you put them all together, then we see, obviously, this is really the only mid-majors. You can throw Russia in there. It's a bit smaller still, 260 billion. It's completely frozen their foreign exchange reserves. Remember, the money is the liability side, but the assets that they buy with that printed money, Russia doesn't buy rubles. They have been during the war. Shouldn't even laugh at these assholes, but or perhaps I should laugh. The money that they've been printing during the war, they have bought more ruble assets than they traditionally bought, but they have had a lot of foreign currency reserves precisely to protect the weak, pathetic currency that is the ruble. So 260 billion, roughly 300 billion is foreign currency reserves. That's frozen in Europe and the US, and that will be used to repair Ukraine. But they still have 200 billion in gold on top of this. So notice that they are a fully collateralized in the sense of non-rubles on their asset side, which I think this shows that they're a little bit safer than people actually understand sometimes. I'll do another analysis of this in the future, more in detail. But roughly, yeah, they do grow at a fast pace, 25%. You can see there, this is from the 90s, 25% per year on balance for the ruble. That is rubles upon rubles coming out. It was valued at 260 billion at the moment. But they got a lot of gold still behind this. And thank goodness the West confiscated this blood money of their foreign currency reserves, which means they're just holding euro bonds, dollar bonds. All right. But still, it's a decent sized monetary base. We got the Hong Kong dollar, around the same size. All right. A little bit better performance, as you can see there, 13% compared to Russians' 25%. All right, so a little bit better performance from the Hong Kong dollar over all-time period. South Korea, 17%, 200 billion. Aussie dollar, 200 billion, 10%. Canada, $170 billion worth of loonies printed by the Canadian Central Bank. That is down from COVID highs. They went to like $250 billion, which is a lot for them. 8.36% compound growth. Relatively responsible currency. About the same compound growth is the dollar, even better, as you see, 8.3 compared to the dollar, 8.8. I'm not going to name all of these. Let me know in the comments if you want me to talk about something, but let's go to the outliers here now. Turkey. Okay, this is interesting. So Turkey data goes all the way back to the 80s. Pretty transparent central bank, actually. They even publish daily balance sheets, which not many central banks do. Okay. $100 billion balance sheet. And when I say balance sheet, it mostly means the monetary base. Okay, I mean the liability side of their balance sheet, the money that they print, the hard money that you would compare with Bitcoin, $100 billion. All-time CAGR, nearly 50%. This is a scorecard figure, okay? This is probably one where I should give you the exact number now, and I will. Just give me a second, because it'd be a good contrast. Just 1 second. But if we're looking at Turkey at 46% since the beginning, if you want to know what they've done relatively in the last year, it's even worse. Yeah. 66%. All right. So Turkey is an example of a country that is, the term is used sometimes, galloping inflation. It's not good. All right, it's not a good picture. They're trying to assert themselves in Syria. It's very interesting. They have imperial ambitions, whatever. But Turkey is, you've clearly would have seen that the lira has been making noise in the news over the last few years. This was even before COVID. They've been on this constant churn of printing lira, well in excess of global averages, and they're a pretty big central bank. I mean, 100 billion, again, that's way smaller than the top four, right? 20 times smaller. But it's a pretty big number. 100 billion, 47%. Okay. Then we got two other ones here that are kind of fun. My buddy Fernando down in Brazil. This is a scorecard. All right. So this is, again, one I should read you the latest 12 months, but it's a $200 billion monetary base. Okay. 93% since 1969. All right. So again, I want to be clear. Their latest inflation is only about 16%. Only, quote, only 16%. Okay. Trailing 12 months. This includes all of the junk currencies that have been reset since 1969. So it's more of a scorecard. It's very accurate. All right. I want to say that, like, again, Turkey's worse than this number at the moment. All right. But what you're seeing here is a scorecard figure. It's not an average. It's a very solid compound growth figure. And you can even do that when currencies reset. I've done it for you. But this is challenging for the people of Brazil. They have to deal with this. It's not what they're feeling right now. What they're feeling right now is a 16% base money growth. But still, it just shows you what they've been through in the last 50 years. Same with Argentina. That's the other big country that just is traditionally, South American massive inflation. Only 20 billion, so 10 times smaller than Brazil. 20 billion in value. We got Milei in for a year now. Their all-time CAGR is 101%. Again, they're doing much better now, but still growing a lot. Let me find the CAGR. I actually spoke too soon. I spoke too soon when I said it. The monetary base as of October, I need to update this, but as of October, 213% year on year. It's coming down a little bit, but so it's actually worse. Argentina is worse than this. Now, you might be wondering how that could be if the interest rate year on year has come way down. Okay, way down. They're only experiencing, as far as I know, when I say not interest rate, exchange rate fluctuations, they're only losing value against the dollar, say 20% right now year on year. It is about 20%, where the Argentine peso would be losing 70%, 80%, 100% year on year against the dollar, inflating rapidly, devaluing rapidly against the dollar. It's a rough go there. But the thing is, Milei has stabilized confidence because he has devalued the peso. He's devalued the peso against the dollar. He's brought the official rate closer to the black market rate. And by the way, I use black market rates in dollar terms for Argentina, Nigeria, and Iran. This is a black market rate for Iran. They would post a little bit higher. Anyway, it's just an aside. But he has done things to try to stabilize the central bank, even though they are still printing money at the moment. So they got work to do. They got plenty of work to do to get out of the woodshed. But Brazil and Argentina, what you're seeing here, kind of all-time figures through many currencies since 1969. All right, so this is an all-time scorecard. This is the whole enchilada. This is as pure as you can see it for what the value of a nation's core monetary asset, how it grows. Okay. Cronus, thank you. Got your message. Appreciate your words. My take on Sina and Giovanni's. Oh, fine. Yeah. Look, I try to keep it positive. I find Sina to be very, very respectful and impressive, generally. Giovanni's work I find to be very impressive. His temperament is a bit aggressive. uh, there's some issues there. I think that a lot of people in the space that have come across him have dealt with. It's on him, nobody else. I don't want to put too much judgment out there. I really don't have a dog in the fight. But I do think that what Cena and Plan C have been doing in their Bitcoin quantile model, and I'll throw it up here just for you guys to see. Let me throw it up because it's a great model and we should talk about it. Plan C. It's an absolutely great model. Why can't I see a latest one? Here we go. Well, that's not even a good one. You got to put more numbers. This is my favorite one still so far. Let me pull it up. It's a little bit higher price. I still got to get my switching better. Here we go. Switching over. This is the Bitcoin quantile model, okay? And it's a little bit different than what I have been doing or Giovanni. We've all been doing different variations of a least square power regression model. But what this does is it runs depending on the bands that you decide. And here he only has 4 bands. Okay, that's it, 4 bands. It takes the borders of these bands. So actually, there's going to be 8. There's going to be 8 percentiles that he's looking at here. And if I count them, 1, 2, 3, 4, 5, 6, 7, 8, right there, exactly. Okay, so there's 4 bands, and the border of each band is an extra percentile or quantile, as you call it, right? And you can put these nice bands and borders. The reason it's different than what I do with my multiple model, which I like to see things as far as multiples over or under trend, is I'm measuring the percentiles on the multiples. But they are taking a quantile regression, which goes right on the price. But when you do that, if you would look here on log, this is on log linear, which I think is nice because log linear just shows you how that's kind of nice parabola type of an effect. On log, which remember, power turns into a straight line on log. My models still are mostly like all parallel. I make bands, but they're kind of all parallel still. But this is using a little bit more sophisticated model where you can make each band slightly bend with its own coefficient. Okay, it's called a pseudo R squared analysis, I guess. So you can get the R squared, which is the straight up OLS, main regression, power regression, all right, which is around $90,000 at the moment. But then you can also create these bands around that, which is it's a separate analysis. And what happens is the bands are fatter at the back and they're closer together in the future. And so if you looked at it on log, they're actually not parallel. They're running like they converge on each other. It takes a long time to converge on each other, like 100 years or more, 150 years, I'm not sure. But it's a little bit of a variation on the math, okay? So I think it's a great way to look at it. It's very nice. It doesn't quite catch the top, neither does mine in 2021 on the 99.9th percentile. That's what he's showing here. Actually, he's showing you all in red. I don't know if it's 99.9 or 99, whatever, on the edge band. But the point is, where I like to look at things as multiples. Okay, so over and under the regression, that's how I usually look at it. I run percentiles on that, and we can go back to that at some point. But what Plan C has been doing with Cena is looking at this percentile quantile model. And so then you can just divide it up by percentiles. It's a little bit harder for the average person to think about. Like you can think about, okay, what's a 99 percentile event in the past? Okay, here's a good example. Show me in the past where it got. Okay, December 2017 top. That was, when we got to over 20 grand. That was a 99.99 percentile event. November 21 top, that was a 96.8 percentile event. Okay. And even, this is interesting, even the April 21 top was a 99.5. So this must be 99.9 at the red band, I'm presuming. The top of the red band. It's interesting how it looks on log scale. But the point is that even in April 2021, it was only a 99.5, and it just shows you how log really transforms things, because it seems pretty far away from the top compared to 2017, 2013, but it actually was only, quote, only a 99.5% top. So this, you have to sort your mind around these percentiles. But the thing is, the percentiles are not necessarily intuitive. You have to benchmark it against prior percentiles to see where we might go. That's the point. So this is a great chart, I think, as far as like giving you all the data. Okay, and this was a couple days ago. Obviously, we were at 102,000. It doesn't matter. It won't change the model at all. So what he's showing you is out. If we look out now into 2025 and into 2026, he's going out by quarter. We go out to October 2025 or January 2026. You go up to these 99.9 percentile models, you can get the projected price. That presumes another boom, and it presumes that you get close to these top bands. You got anywhere from 196,000, let's say, from the 90th percentile to 346,000. So that's actually the best way. I like using multiples because then I can just sort of snap my fingers. Okay, I think that the top is going to be at 1.7x the OLS. But the problem with my analysis is I'm still not using quantile, which would, again, turn it back into percentages. I want to look at the multiples. But it's a totally different analysis. My point is, this is probably more, it fits the tops better because it has that sloping on log. You know, you're not running parallel the lines. And you gotta look at the numbers. You gotta look at the percentage to see the range. So again, look at the range. A 90 percentile event in October 2025 will put you at 196,000 Bitcoin. Let's round it to 200,000 Bitcoin. Round it to 350,000 Bitcoin by January 2026. So this is very close to my estimates as well. I mean, I'm thinking like somewhere 250 might be a top. These are very good estimates based on the power curve, based on how things go. Adoption of Bitcoin as a network. I think all this just continues to solidify the idea that Bitcoin is a power curve. It runs in power over time. So something like this, looking a year out, when we know we have these 4-year tops, it doesn't mean for sure we're going to have a 4-year top. A lot of people talking about if we're going to have just grind higher for the rest of Bitcoin's life, because we have so many eyeballs now in the markets. We have so many ETFs, hundreds of $1 billion in ETFs, which is just unbelievable. Massive dwarfing of interest in Bitcoin ETFs compared to gold ETFs 20 years ago in any metric you look at. A lot of people wonder, right, are we going to have that top? Maybe we won't have this blow off top because there's so many, people trying to arbitrage the moves up. They try to, enter some shorts to make it come down. Every cycle is different. No doubt every cycle is different. However, my general view is past is pretty strong for prologue still here for Bitcoin. And so I do think that we're going to have some kind of a boom and some kind of a regression or a retest of the lows again or prior highs in 2026, 2027. And that portends, that we will get up to something like over $250,000 by the end of 2025, 2026. Not financial advice as always, but that's what I sort of envision there. And I like this chart because it shows you right now where we are. We're in 67.6%. So that's always an important number. We're in 67.6. So we're somewhere here, right now, right on that blue, right between blue and beige. And when we start to get to that beige, first of all, the interesting thing is look at how many days or weeks we stayed in the beige section over time. And then look at how many weeks we stayed in the red, even less. So it's the same idea as my model, same idea as many that Giovanni has done. But this is probably better, but you gotta make sure your mind is attuned to the percentile quantiles, not to a multiple. For me, I go to the multiples all the time, but you gotta think about it in terms of percentiles. And it's hard to sell no matter what happens. I can tell you that. All right, you're here. You're not really sure where Bitcoin is going to go. You think that this might be it. We might be moving into some crazy hyper Bitcoinization. Maybe it could happen. It's hard to sell at any given time. But I will say that with my experience now and seeing sort of even the way that there's this apparent dollar hegemony coming back, hegemony, I should say, this dollar hegemon coming back into the markets with Trump, just being a hawk on everything. And yet, ironically, he's still going to want lower interest rates soon. Still, the dollar, the power of the dollar is coming back. Even if they do something like a strategic Bitcoin reserve, they're going to do it. They're going to try to do it very stealthily. All right. These are people in the markets. No matter how much I dislike someone like David Sachs for being a Putin appeaser, these are people that are in the markets, and they are not going to be stupid about how they buy Bitcoin. So I just don't necessarily see like some news flash that's just going to take us to, $1 million Bitcoin, or going to peg Bitcoin to the dollar. I don't think anybody close to the printing press, close to the halls of power in Washington, for example, or other places. You hear how the ECB has been denigrating Bitcoin as their strategic reserve. Clearly, with false hope. But, it's going to take time for those things. That's my point. I just don't see them. If you're close to the printing press, if you're close to the halls of power, it's just like Saylor back in 2020. He was buying as much as he wanted to with his stack before he announced that he's gone full on Bitcoin treasury. He was going all in at, 8, 9K per Bitcoin, 10K per Bitcoin before he started publishing more info about it. Those are the types of moves that I expect to happen with the U.S. government, and I expect them to be pretty coy about it. Again, U.S. government isn't the only driver. So, thanks for the comment. There's a little bit of thoughts there. But if we go back to the... go back to this here. I want to also say, I ran a few trend lines here. You can't actually get a great fitting trend. Like, it's a little bit logarithmic, but it doesn't really matter, right? You would think that we could maybe determine something here, a value versus money growth rate. And money growth rate is where it's all about. Forget what they tell you about price inflation. That is an opinion. These are facts. This comes from the balance sheet. Of course, they could be lying to us all. China fibs some things at times. There's arguments about how much gold Turkey may or may not have. There's a lot of things like that. But still, it's published to the marketplace. States are at least theoretically supposed to be public. I'm not defending the way that they manage the money supply. I'm not defending that. I'm just saying these are facts that I'm showing you. This is not an opinion. These are absolute facts. And those facts should lead one to think about the value of their currency. So the biggest currencies in the world, all right, and whether this number surprises you, $5 trillion or not, this is in actual dollars that are printed by the Fed or the ECB, BOJ. $5 trillion for the top four currencies, another trillion for pound sterling, another trillion for the Swissy and the rupee. All right, so there's 22 trillion right there. They still grow at something like, in the best case, 8% per year, 8.8% per year to 10. Super important to think about. All right. And there's no, I don't find any interesting patterns here. You can point out a couple interesting ones, right? Like Singapore, that's one of the best ones. All right, again, this is dollar trillion. Okay, so I can't get the numbers to show up better on this software, but it's that's 70 billion. It's a very small market cap for Singapore, the Singapore dollar. Everybody knows it's a well-run, benevolent dictatorship. That's fine. 7.2% per year of the Singapore dollar. That doesn't mean foreign currency that comes into Singapore or whatever. That means the dollars that the Monetary Authority of Singapore, that's what it's called, issues, prints, 7.2% per year. And we also got this one, which is Vietnam, communist country. Very hard to get this data, by the way. And this is only physical currency. There is no data on bank reserves in Vietnam. So it is what it is. And this is not that long. I don't know. It's something from like the mid 2000s when you have the data from them. 6.23% per year. 6.23% per year. So you think about those things. You think about, this is an interesting one, by the way. One point about Norway. Extremely small monetary base. Actually, the smallest in the data set of the top 50 currencies. You would think the Norwegian kroner would be bigger. Only 10 billion. $10 billion. 27% growth rate on average. All-time compound annual growth rate. It's a strange currency. That's all I can say. Is also what you don't see here with Norway, sitting right next to it on the central bank balance sheet, is their $1.7 trillion sovereign wealth fund, which is like awesome and runs a huge profitability for Norway and invests in like 6,000 companies. So, there are some asterisks here, some footnotes. Norway's an interesting player. All right, they've strategically, effectively, since the 90s, had this sovereign wealth fund. Interesting that Donald Trump said, I support that. A sovereign wealth fund for Americans, that'd be great. Recall my prior videos, which I can link, about the Social Security fund, which is not a sovereign wealth fund. If you look up in Wikipedia, sovereign wealth fund, you will not find United States Social Security. If you look up in Wikipedia sovereign wealth fund, you will find certain state pension funds, Ohio, Illinois, California's state pension funds. They invest in companies in real assets and thus turn those dividends and cash flows and value forward onto their pension holders, their pensioners of those funds. That's not what Social Security is. Right? You'll also find, of course, the Saudi fund, the UAE fund, a lot of the, and the Norwegian fund, which is perhaps the most famous sovereign wealth fund in the world, and it's the largest. All right, it's getting close to $2 trillion now in value. So that sits right next. It's located on the central bank's balance sheet, and it sits right next to this 10 billion in monetary base. So Norway's a pretty funny outlier there. I wouldn't take too much stock in this 27.5%. It's an extremely volatile monetary base. It's like they throw some money in and out of the sovereign wealth fund every month. I don't understand why they do it. Someone from Norway can tell me, but it's not a big deal for Norwegians. Okay, so here it is. Now, of course, we got to show you the apples to apples comparison of the three commodities that make most sense in this chart. And of course, that is gold, silver, and Bitcoin. So here we go. Gold. $16 trillion. Right? This is gold available. This is not all-time gold. That gets you over 18 trillion. This is deducting industrial. I've talked about this 1,000 times. This is just available. And the all-time CAGR rounds to about 1.7%. 1.7. Which means from December 1969, in native ounces of gold that come out of the ground, it's about 6 billion ounces of gold. Silver. Bitcoin has passed available silver. They've passed it a few times. They passed it again. Bitcoin passed it again last year. It's about $1 trillion in market cap at the moment. 30 billion or so ounces of silver. grows at 1.3% per year compounded. Okay. So once you take off, remember, silver, including industrial, grows, even with industrial, it grows slower. Notice, silver with or without industrial still grows slower than gold. Sorry for you silver haters. The stock to flow to silver is better than gold. It just is. It factually is. Okay. And then we go Bitcoin. We're now at $2 trillion here. All right. $2 trillion Bitcoin, 1.1% compounded growth. Now, I have an asterisk there. It says TTM, all right, even though I'm using all-time growth for every other metric here. I'm using trailing 12-month for Bitcoin. And as we know, we're in the declining period of growth, right? So, we were at like 1.8% before the halving last year with Bitcoin. Now we're moving into a sort of a 0.9% scenario per year compounded for Bitcoin growth. But if you actually did all time, that is like 50 Bitcoins in January 2009. Remember this logarithmic growth. It did grow much faster. It's like 46% compounded. So you would be actually somewhere like here with Bitcoin. I could show it there. It's fine. I don't, but whether I show it here over in 46% or here, I think if you ask the question, what is more economically reflective of Bitcoin's growth, it's the trailing 12-month. Okay, because with Bitcoin, we know per the protocol that this is how it's growing, and we know that the issuance or emission will have every 4 years. That means this figure will have every 4 years. That means we know it's going nowhere back to 46%. But technically, the compound growth since 50 Bitcoins in January 2009 is about 46% per year compounded. So that's why there's an asterisk here. I just put it here. So anyway, there you see, there's their commodity money now, growing very slow, 1 to 2% per year, let's just say roughly. Bitcoin is better than gold, silver, and Bitcoin. Not bigger than gold yet, bigger than silver. And the only currencies that Bitcoin is smaller than are the dollar, the euro, the yen, and the yuan. So Bitcoin is getting very close to these monetary-based numbers. Another interesting fact, which I've talked about a couple times, is if you look at the gold holdings of central banks, they hold about $6 trillion worth of gold. All right, at the moment. No, sorry, 3. It's about a billion ounces, 1.2 billion ounces times $2,700 price, a little bit more. You're getting over $3 trillion in value. That is just gold in central banks. Bitcoin is 2/3 of that number. So the math starts to become very interesting when you look at Bitcoin, what it's compared to, how you want to compare it, what you want to do, apples and pears, as they say in Britain, apples and oranges, as we say in the U.S. This is the best table, in my opinion, to do apples to apples. Like, forget talking about Bitcoin compared to GDP or it's a flow. First of all, that's not a stock, or even compared to stocks. Even though Bitcoin is a top 6 stock in the world, all right, and I have that on this site as well, my website. Here's a top 10 stocks, top 10 base monies. Everything I just talked about is all here on my website. Bitcoin is a top 6 stock. All right, you see here at $1.94 trillion Bitcoin. It is 200 or 150 billion bigger than Saudi Aramco, and only about 600 billion smaller than Google. All right, so if you want to do the stock comparison, you can, but it's not. It's a side story. Stocks are not units of account, as I show here. They're not medium of exchange. They are stores of value, but they are not these other things. The 3 traditional forms of money is store of value, unit of account, and medium of exchange. You just cannot send your Apple shares to your friend in Turkey or in Singapore. You cannot do that. You could transfer your brokerage account. It would take a long time. You'd have to fill out a lot of forms. It would be annoying. You could probably transfer your brokerage account from, with good reason if you move to Singapore or something from the US, but it's a very rare thing. It makes no sense in reality to think about. So there's no unit of account function for a stock. It's only store of value, all right? No medium of exchange function either, okay? It's not common to send it, and if you were to price it, right, like we can price barrels of oil and Apple shares or something, but no one does that. So that brings us back to this chart. This is the whole enchilada. I got a comment here from Ethan. Am I saying we should stock on gold? No, not saying that. I'm saying Bitcoin is hawking gold, clearly. Gold grows at, if you looked at my video yesterday about the stock to flow, remember, stock to flow is a modified power curve. Power curves are not exponential curves. Exponential curves are what gold and silver follow, but it's a very weak exponential, all right? It's only growing at 1.6% per year, all right? The dollar value grows a little bit faster because price grows faster, but still the exponential curve is not that strong. It's, let's say 5% in dollar terms, okay? Gold and silver. They do grow. Gold and silver grows, as everything here grows over time. It goes up. It certainly goes up. But notice, this is another difference. It's a key difference. It's a good point, actually. All of these dots on this chart, if you want to think about what this lifetime compound growth figure represents of this, 10%, 20% issuance, since it is an exponential function, just like the emission of Bitcoin, when new units come on board, still more value will go into those units. They will lose some purchasing power, but generally the value of those units will rise. So what happens is all these bubbles, as new units come online, all these bubbles generally rise, okay? They might not rise as fast as others, but they generally rise, and they rise straight up because the compound growth is generally the same every year. For the dollar, it's 8.8% per year. Just, that's how it works. Bitcoin is not like that. Bitcoin is not like that. The emission is a decaying exponential. Remember, it was 1.8% per year, 1.9% in the last halving. Now we're going to go to about 0.9% in this halving, and then 0.45%, so on and so forth, down the line. That's a decaying exponential function, the result of which you run, if you run Bitcoin on power curve, is Bitcoin has a very high compound growth rate, which declines over time. And at the moment, it's 45% per year compounded. So if you want to speak in the language of Bitcoin's price compared to this other stuff, Bitcoin grows at 45% per year compounded. All right. Price-wise. And all these other currencies grow at, the strong ones grow at 10% per year compounded. So if you want to talk about beating inflation, and gold and silver grow at 5% per year compounded, 5-6%, that is the price, not the units, but the price. So if you want to talk about preserving your purchasing power, if all these things are growing, they're inflating in value, and they grow at 8, 9, 10% per year, but the price of Bitcoin grows at 45% per year, even though that does come down, like in 2 years, it's going to be 42% or something like this. Bitcoin seems like a pretty good monetary asset to preserve your purchasing power. All right. Let's go to the power curve on my website. Remember, I got to get more charts up there, but this is always there for you to look at, the power curve on my site. And if we want to understand what the power curve means with Bitcoin, it's different than exponential. With exponential, I can tell you, okay, you grow at 10% per year, that means your stock doubles every 7.2 years. With Bitcoin, it's not like that. If I want to see how fast the Bitcoin curve doubles, it actually is a proportional increase. And you find that just by picking a point. So, for example, here, 2011, March, 800 days of Bitcoin, if you increase Bitcoin by 12.8%, the days of Bitcoin's life, all right, so from 800 days, you add in 104 days to get to 917 days, the price doubles, the trend doubles. That's how it works. All right, but there's a proportionality here, and that's the last column. The proportionality is 12.7% per year. Sorry, 12.7% in time. Not per year would be an exponential function. Bitcoin's a power function. So it means an increase in time. That's how it works. It's different. Bitcoin is the only bubble here that works in power. Gold, silver, all the other currencies, they work in exponential. So that's a key difference. So I'm not saying stock gold because gold is growing way slower than Bitcoin is. Bitcoin at the moment doubles, or I have a doubling time. Right here is doubling time. Bitcoin doubles. It's on a 1.7 year doubling rate at the moment. This is where we are in Bitcoin world. We're between this period and this period. 2024 March, 2026 February. Okay. And once we increase 700 days, that is between, you can pick any point. I'm just doing this because I start my date on Bitcoin Pizza Day, May 22nd, 2010. But between March 2024 and February 2026, all right, you do a 12.7% increase in the amount of days that have passed so far in the system, in the network, you'll get a double of the trend. You'll go from 65,000 to 130,000. So that's where we are right now. In other words, we're doubling at about, it's this one, it's the first line, 1.7 years. Bitcoin doubles every 1.7 years. That's what the trend tells you overall. So there we go. That's the global money scorecard. Just wanted to show that here. The last chart I wanted to show today was, let me go back here. And let me go here. Volatility. My buddy is at the best Bitcoin data group, Plan C and Cena, as you mentioned, Cronus. Cheers from LT, by the way, as well. Thank you. I mean, cheers from the Baltics, but thank you for your cheers. They've been doing this Bitcoin volatility set. All right. So if you look at the price, I should have the price here because it's more helpful, but I wanted to keep the chart clean. Volatility. What is it? Very quickly, it's a standard deviation of any time period. It means 2/3 of the time. Price will move up or down in amount. It's always a positive number. Okay, so number is positive. It's just saying here that back in 2010, when Bitcoin was very, very small, it was under $1, price could move up or down any day. 2/3 of the time, it would move up or down 35%. That's high volatility. All right. Obviously, it's come down. And really, it's come down, 2013 is pretty low, even you could say relative. This is pretty high, 14% in April 2013 and then December 2013. But after that, after you get to that crypto winter that flushes a lot of, the crazy money out, you didn't get back up above 8%, 9% on the crazy days. And there's a rolling 30-day window. So this is why you get these weird peaks, is I'm just resetting it. I'm just saying, if you can hold it through these 30 days, you might get some relief on the volatility. You might get a period, a stretch where it's 5%, but then it goes down to only going up and down 1 or 2% a day. All right. And so now, I know I got my zoom here, but we're somewhere around a 2-3% per day. But let's put an all-time average here. Okay. All-time average. Smooth it out. We can see obviously the volatility was up 30% here in 2010. Now we're going down 4.2% on average. January 2025. And then we can run a trend on the average. It's a power trend, of course. We find power trends a lot with Bitcoin. Nice sloping curve here. It's the dotted line. I'll take off the average now. The dotted line 93% around the average, so it means it's a pretty good trend. Started at 15%, all right, volatility in 2010, now 3.9%. For reference, gold and the S&P 500, they are under 1%. Under 1%. Okay, so Bitcoin still is 3-4 times more volatile than gold, the movement of the gold price and of the S&P 500, but that's way better than being, 20 times more volatile. Right? So this is a drastic improvement. But here's the thing. If this trend holds, and I don't know, I haven't thought about this enough if this will hold as much. I presume that it will, though. If this trend of volatility holds, Bitcoin, this is also why I think it scares people. Like, this is why people are going to stay away from it for a while. It's not going down to gold. Even during the entire life of this chart, which goes out to 2050, it will not reach the volatility of gold or the S&P 500 today. The volatility of gold in the S&P 500, under 1% a day. That means in any 30-day window, you can expect the price of gold or the price of the S&P 500 to move up or down 1% a day. Bitcoin's, it's still projected even 25 years out to be double that. It doesn't mean that's what it's going to be, but I find that an interesting number because people wonder, like, why isn't everybody just jumping into Bitcoin? It's an amazing asset. It still scares people. They still don't understand it. They don't understand the network effects. And again, I'm not trying to sound like pretentious there. I mean, everybody, caveat emptor. But I think there are signs of why people get scared of Bitcoin. And one of the biggest signs is volatility itself. So even though we have a great movement here, a great trend in decreasing volatility, maybe take comfort in this high volatility still relative to gold, relative to stocks, in that, grandma still is very much scared of this volatility. And so let that bring you comfort when you see Bitcoin, be $105,000 last week, or 106 or 8, whatever it was. And then it went down to like 92 on Monday. Take comfort in that, because that's a volatility that's scary. Those are Maylocks moments, and that scares plenty of investors still. Plenty of established investors it scares. Certainly scares grandma. Congratulations, Ethan. Oh, interesting. Yeah. No, I mean, tell me more. Ethan says he's from Turkey. How are prices actually acting there? I hear that they have relatively high inflation, galloping inflation, but the amount of money that gets printed by the central bank is a pretty solid number. That's a lifetime figure. Yeah. I mean, that really is high. It's not as bad as Brazil and Argentina. And again, Brazil is not as bad at the moment. They're only about 16%. But Turkey's worse as far as money supply coming out of the ground, out of the central bank of Turkey. It's even higher than 47% per year compounded, 48% per year compounded. So always things to talk about. People get bogged down in the numbers. I get bogged down in the numbers plenty. But I do try to bring it out to the big picture. And if you keep in mind what I talked about with stock to flow yesterday. Stock to flow is a modified power curve. All right. Let me find the price and just show you again. I'm going to end it with stock to flow just because it's always fun to talk about stock to flow. Stock to flow is a modified power curve. All right. So when you look at price models, let's look at Plan B's 2019 model here. Slightly redundant from yesterday, but I'll finish the video with this for people that are interested and didn't see it. All right, remember, Bitcoin is power. Okay, so just as I explained a bit ago, again, that the way that for every 12.7 increase in days in the Bitcoin network, this curve doubles. That's all that I was saying. That's all that this curve tells us. That literally is the full information that it tells us. For every 12.7% increase in the Bitcoin system's life, doesn't matter where you pick it on the curve, add another, take that amount of days, add 100 and multiply it by 112.7%. Take that new day, find the value on the y-axis, it's going to be double. Okay, that's what a power curve does. It's different than exponential growth. That's how it looks. Okay, and we're a little bit actually above trend still on price, although very volatile at the moment. These are sort of daily closes. You remember we were even close to 90 grand on Monday. Exponential trend, way different. This is the trend of gold and silver. Way, way different. Just way different. Grows at a constant growth rate here, which is very fast. And you start to get absurd numbers with exponential, right? So by even 2034, 10 years out from now, 2035, we're looking at $1.2 billion Bitcoin on an exponential trend. I don't think Bitcoin's on an exponential trend, right? Someone else tell me, I would love to see $1.2 billion per Bitcoin. You're reading this right, per Bitcoin in 2035, but I don't think it's going to happen. Thank you, Ethan. Appreciate it. Silver's exponential chart. My cousin Vinny. Yes, we can. And definitely ask me, guys. I'm happy to show these things. Do you want to see it for price? I'll show you price. Because remember, we got price, we got ounces, we got dollars. I'll show you price. Here we go. Silver price. All right, let's take off a lot of the noise. Here's the trend. It's not a strong R squared. It's not a strong R squared, 52%. It's much weaker than gold's R squared, but it is exponential, right? It is an exponential trend. The price is 31 bucks, all right? This is a monthly swing, by the way. So 31 bucks as of January end. The trend is 22 bucks, all right? And the slope of that curve, 3.5% per year. 3.5% per year. But Bitcoin doesn't do that. Bitcoin moves at this 45. It's a declining. Let me get you the declining trend for Bitcoin so you can see actually how it works. Oops. Am I still on the page? Yeah. Here we go. So Bitcoin is a declining. So unlike silver, which is flat, exponential, and everything is like this. Gold, silver, stocks, everything in financial markets is like this. It's exponential. Okay. If you would graph on average, that is on the trend line, the growth rate, it's a flat line. See that black flat line? It's the right hand axis. 3.5% per year. That's all it represents. Of course, you can be way under that if you fall. You can be way over that if you catch the peaks. And these are like decades long trends. This is the wild thing, right? This is decades long trends, but it is exponential. At the end of the day, it's exponential. And it's not that amazing. Like imagine following Peter Schiff's advice and buying silver in 2011 instead of Bitcoin. You would have bought, first of all, you bought silver at the top, 50 bucks. And now it's down to 31 bucks. Anyway, it doesn't grow that much. It's projected to be another 50 bucks at 50 bucks, not another, but at 50 bucks in 2050. That's the slope. That's the exponential slope of the silver price. All right, Bitcoin. When you put this stuff on log scale and when you measure the slope, this is a slightly different looking chart. I should get the exact chart so you can see this, same logic, but it's the same thing. Let's look here. This is the trend. If you run a returns on the trend, you see that the trend slopes down. So unlike silver where the trend is flat, the returns are just the same, compounded per year, 3.5% per year. The trend line here is a nice downward sloping percentage. So obviously, if you were lucky enough to get in Bitcoin, and I was not, unfortunately, in 2010, 2011, you were looking at 128% compounded on the trend. And if you go till today, we're running at 43. I keep saying 45, but it's 43% per year. But this is a very slow decline. Okay, 35% still by 2030. Very slow decline. Yeah, gold's better. Gold is better, and Bitcoin is better still. I mean, I think we got good tailwinds. I'm not too, I'm not opposed to throwing other coins up there. I just don't have a lot of the data at the moment. And I do think Bitcoin is like the main story. So I'm probably not going to do many other coins. Mostly focused on Bitcoin, but it's not, caveat emptor. If you want to look for some alpha in the crypto space, and you got someone like David Sachs, who's like a sole early investor, then, obviously it's not the most outlandish idea to think that you couldn't be ahead of the returns to have some SOL or whatever. But again, SOL is up like, what is it, $250 now? And 2 years ago, during the FTX debacle, it was $3. That was probably the time to buy when there was blood in the streets. I'm speaking purely in terms of speculation. More, I'm a pretty Bitcoin first guy, and if you go back to this chart, there's nothing in my opinion that compares to these currencies other than these three things: gold, silver, and Bitcoin. Even Ethereum, even though it's got a pretty big market cap, what is the market cap of ETH? It's not $1 trillion, but hold on, pulling it up. Market cap of ETH is 200 billion. Yeah, it's 10% of Bitcoin, so it'd be 200. It's like 200 billion. So you're somewhere here for ETH. 350 bill. I got 10.85% of yeah. I think it might be lower. Why can't I find it on? I got a trading view app here. It should work, but I got only the ratio. Anyway, 200, 250. Here, I'm looking it up. No, you're right. Why is that? That's interesting. You're right. 335 billion is the ETH market cap, but that's very interesting because that's percent of the total market. I thought that was percent of Bitcoin. Yeah, you're right. Okay. 350 billion. Sorry, 350 billion. So you're somewhere here. As for the emission rate, that's a whole other interesting thing with ETH. I haven't analyzed it as much. They've had this like changing thing with, this burn rate has been declining, then increasing again with proof of stake. I haven't followed it as much, but it certainly would be an interesting thing to look at. But I don't know. I could be biased, but I just think that Bitcoin, what's the Bitcoin market cap relative to dominance? 61%. Yeah, so it's 60% of 2.6. Why can't I? 3.3 trillion dollar crypto market. Bitcoin's 2 trillion. Stable coins are a big portion of that. Yeah, I mean, I'm not opposed to looking at them, but I have so many other things that I'm thinking about, like as far as money and these comparisons, like the value of the sterling money supply or the value of the yen money supply that I want to talk about as well on this channel. So I'm probably going to explore those things more, and even the relationship of Bitcoin to those things than, for example, like SOL. But caveat emptor. I have no problem with trading shitcoins if you think you can get some alpha over Bitcoin. But I also think that it can be super risky. But, we got tailwinds. We got tailwinds with Sachs and Trump and all these guys. I mean, Trump's got his own shitcoin, so it's a whole different world. It's a whole different world than it was under Biden. That's for sure. Okay. Yeah, I mean, we could talk about some stocks as well. I haven't looked at that, but let me know. Let me know what you guys want to look at more. For me, it's more about like let's try to get an understanding where we are with the market caps of each currency, how fast the currencies are growing, and then where Bitcoin fits into that growth rate. So here, if you look at that, I mean, everybody always talks about how Bitcoin's digital gold, right? That's a constant. I've been in Bitcoin a long time, and that's been an idea since the beginning. The Winklevi, we're talking about it. So we're leaps and bounds, today from where we were just like 2 or 3 years ago. And this is because of the power growth, not exponential growth, but the power growth. And then again, you wait a couple more years, like we're going to be tapping on the door of these top fiat currencies and then gold itself. But the interesting thing is, and this is like what you think about with all these, like, think of these as all shit coins, right? Like this is somewhat analogous to whatever Bitcoin or, I know it's not, none of it fiat is analogous to Bitcoin, but we got a lot of shit coins. And then we got like a top 4 sort of crypto world of currencies, right? In the top 4 currencies. But of course the dollar is the world's reserve currency and reserve unit of account. Even if Bitcoin is now larger than the silver, it's larger than the pound sterling. It's not like the sterling went away. That's the interesting thing that I think, how we're going to see the dynamics in the future. It's not like sterling blew up into the sun or the Swiss franc is now gone. It's still there. Even all these other crappy currencies. Poland is a awesome, neighbor of the Baltics here. They're an awesome country, have done a lot of investment. Never had a recession from 2008. Where like really the whole world did. Small base money for the zloty, $130 billion equivalent, grows faster than the dollar, 12.87% per year. But, these currencies aren't going away. And so, if you add up all these currencies, you're at 25 trillion, which is down 10 trillion from COVID times. So a lot of money printing during COVID. But they're not going away. They're going to start inflating more again soon. Trump wants lower interest rates. So these bubbles are going to get bigger. They're going to get bigger. They're going to go up. And so is gold. Gold and silver is going to go up. And of course, Bitcoin's going to go up. So that's, I need to sort of think more about how to chart that trajectory or those changes, because the relationships there will continue to be very interesting, in my opinion. And I think more interesting, well, I believe more interesting than like any other altcoin. Can we back our dollar with gold and then back our gold with Bitcoin? That's a funny thought experiment indeed. Yeah, I mean, it depends on whose balance sheet you're talking about. All right, you can hold both gold and Bitcoin if you're the Treasury. Or perhaps the Federal Reserve could buy, perhaps the Federal Reserve could keep the gold. The Federal Reserve has a lot of gold on its balance sheet, not marked to market. It's about $800 billion worth of gold, although they don't market to market. As I've talked about in prior streams, they market only $42 an ounce, the old statutory rate, to leave room for treasuries, to buy more treasuries. But the Fed could leave the gold, and then the Treasury could buy the Bitcoin. So you'd have like 2 different entities that would own both assets. But I guess the ultimate backstop is the Treasury, and for sure you want the Treasury to have to own the Bitcoin and not the Federal Reserve, because if the Treasury owns it, then it's like the people's Bitcoin. But look, I'm a cypherpunk into this stuff, like withdrawal. I've done many presentations at BTC Prague and other places, Honey Badger, where I talk about the history of gold being confiscated during bloody wars. And thank God we're in a different world today. We have more multilateral cooperation. Information moves at the speed of light. You can see if some country is trying to do some just barbaric stuff. So I don't see gold as having a stronger role. It's just it's clearly going to be something else, probably Bitcoin. But I don't see such a huge value of a. Let me try to rephrase this. Strategic reserve is going to happen. It's already on the books. Like people know it's going to happen. It's, they're talking about it. But be careful of what you wish for, right? Because obviously we don't want another administration to come on 10 years. Let's say there's even like two pro Bitcoin administrations in the US for eight more years. Still have the risk of, in the 9th year, someone comes on who's, more draconian, wants more control of the dollar, tries to start KYCing or just doing some ridiculous things with Americans' money in their accounts, just doing all the Operation Choke Point, all the stuff again. And then you still have that Bitcoin sitting there. It's not going to sit there for forever. I mean, it always could be that, the United States government, for whatever reason, it continues to operate ineffectually at a loss and has a lot of problems. Maybe they'll have to sell that Bitcoin in the future. But the more Bitcoin or the more gold that any one central authority holds, usually the worse, right? It's usually the worse. You want to decentralize. You don't want to centralize. So don't get me wrong. My message has always been withdraw. If you want to play with some leverage, if you want to play with shitcoins, do it with a very, very small portion of money that you can afford to lose. Because in my opinion, and this is the way Bitcoin development has always been, unlike ETH development, certainly I'm sure unlike Sol development. Wasn't the Sol chain like stopped for a while? I don't remember. But anyway, Bitcoin, it is true. There were some down days in the Bitcoin chain, very few. But this is hard. This is very hard money that is comparable to gold. And even if you want to talk about a hard currency, and the yuan is not one, but it's they held some U.S. dollar assets and euro assets, just like Russia did. But the euro and the dollar are pretty big reserve currencies worldwide. Bitcoin is in that arena. It's knocking at the door. So that's where I'm at. Quantum computing as an idea is totally irrelevant to Bitcoin as an idea. Because if any quantum technology could break an encryption or some type of encrypting technology, it will break a lot more than Bitcoin. It will break your bank account. It will break the NSA's secrets. It will break insurance companies' databases. It could break anything. There's nothing unique to Bitcoin's encryption that quantum computing would only focus and target on Bitcoin. It is true that Bitcoin is a honeypot of distributed value around the world, but so is a lot of other stuff that any malicious actor with, say, a quantum computer, if such a thing could exist, let's say in the one hand of the malicious actor, there's nothing there that is unique to Bitcoin. They could destroy any system. So that's the first thing about quantum. The second thing is Bitcoin's encryption can be upgraded, right? We're at SHA-256 right now. I understand SHA-10 is already cracked. I mean, you can, you don't want to be using SHA-10 encryption for anything. But the difference between 10 and 256 is a huge, it's exponential. It's leaps and bounds different than, SHA-256 is leaps and bounds different from SHA-10. I'm not taking it lightly. I know that everybody is thinking about upgrading Bitcoin's encryption from quantum, to be quantum resistant. But that is a fact of life that will have to happen for every single system in the world. Banks, bank encryption, how you log into your bank account, the NSA, insurance, ledgers around the world. So it's definitely talked about. Everybody knows it, but I usually see it as a fear-mongering tactic to keep you away from Bitcoin, which you should be cautious of for all the other reasons that we know. Yeah, I don't have any opinion on quantum stocks or anything. I haven't looked at them, but it's certainly in the, just like AI. If you think that quantum might, kind of like AI took people by surprise how good ChatGPT was last year, I think the truth was most people in the industry knew that was coming. Like they knew that they at least knew that like the work around what they were trying to do with these LLMs was coming. And then again, everybody's talked about AI. Is it really even AI? Is it some very primitive form of it? But even if it's something that is at least seems on the surface like a surprise to some people, for sure, you can be sure that people in the Bitcoin coding community, development community, but even in just general crypto, there are these conferences on crypto and encryption all the time, like big boy conferences, not just like Solana fanboys or something. Like those types of conferences, they're for sure working on these things that might have some, resistance to that. I only say Solana fanboy, not to talk about anybody in specific, but David Sachs, of course, he is one. But, crypto obviously gets a bad name in the Bitcoin community. It's not the real crypto. But there are actually, we talked to my old co-host, Fernando, and we talked to Stornetta and Haber, Scott Stornetta, and why am I forgetting his first name? Stuart Haber and Scott Stornetta, who were the people that invented the idea of a blockchain in the 1990s. They were talking about these crypto conferences that like with the true crypto, and they happen all the time. So, it's not like people aren't thinking about encryption and how to get ahead of new ways to break older encryption models. It's a race like anything else. It's a spectrum. Now, I mean, the encryption, the SHA-256 algorithm, which is that's like the base encryption of how the whole system works. That's what Bitcoin runs on, SHA-256. That can be upgraded. That can be changed. So it's totally possible to work with. And even Adam Back has been talking about some proposals like would be even easier than, I don't understand the ins and outs of these, whether you need a hard fork or a soft fork to do some of these upgrades, but it's totally, in my view, not out of the ordinary from any other industry, like the risks of any other industry. It's not, Bitcoin is not unique. The only thing unique about Bitcoin, of course, is it's a decentralized sort of open honeypot that, of course, people would want to attack. But it's just like with regular mining, right? I mean, you can have malicious miners, but miners usually choose to mine on Bitcoin because it's more profitable. I mean, they always choose to mine on Bitcoin and not try to attack Bitcoin because it's more profitable. And every day, a state attack where, say a malicious attacker that does not care what happens, he just wants the system to go down. Every day that becomes less and less likely. So, all right, guys, I got to leave it there today, but thank you for joining. Let me know, please, any other, charts, things you want to see. I am happy to talk about, and I'll try to do this every day, 11 a.m. Baltic, Riga time. All right. All right, guys, take care.